oil, definitely not, though. Let's go there next. Let's bring in Scott Bauer, CEO of Prosper Trading Academy, who now famously told us exactly 1 week ago that he was going to get uber bearish crude. And the stock market was rallying. I was kind of like, Scott, uber bearish crude? I thought this was a risk asset. Shouldn't it be following stocks? And so tell me, you doubled up or tripled up, or are you still going to do these hits with us, Scott, or what? Are you moving to, Bahamas or something?
No, but I really wish that my homeowners association would let me store some crude in the backyard. That would be nice, as all of us probably.
Oh, you're
feel
ready to
that
get
way
long,
as well.
huh?
I mean, this is just, it's bizarre. It's really bizarre. There's not a lot of rhyme or reason right now, Oliver, other than that massive pressure we saw about an hour and a half ago, right before crude futures, closed trade on the day. I don't know this for fact, so I am not trying to spread any sort of rumor, so do not take this as fact. My guess tells me there had to be a couple hedge funds that probably blew out, that had to just liquidate this front month contract to get it to a price of -$30, -$35 a barrel. That had to be the case.
So, Scott, not to go too quickly away from crude, I want to stick with this topic, but if somebody had to, if there was like a forced liquidation event that was going to happen today that would hit stocks or hit anything else, like we saw some of those high correlation sell-off days across the board, does that mean that stocks are in the clear today? Because if this is all they're going to do, I mean, I would assume that if I'm a fund manager and I've got to get rid of everything I've got because I'm about to lose my hat, lose my seat, whatever, it probably would have happened in the same session, no?
You would think so, and that's what makes this even more bizarre, quite frankly. And I've spoken to a lot of people over the last hour or so just trying to get a handle on what is going on and why we didn't see the market down 5% based on this move, even more. So it makes it very, very, what's the word I'm looking for? Very difficult to really analyze the market right now. Let's see what happens after the May crude contract expires tomorrow, and we get maybe some sense of normalcy. I mean, the June contract, obviously, it's down pretty heavily today. People are focused on that May contract. Let's see how that responds. But right now, I mean, this oil space is in disarray in terms of being able to store oil anywhere. I'm seeing that upwards at Cushing and upwards in other places, over 70% is already filled. There's nothing left out on sea to be able to store anywhere. So what happened was a lot of these refiners today, it got to the point where it was probably economically and or environmentally not feasible, just not feasible for them to shut down a well, right? So they would rather pay someone to just take it. Now, the ungodly prices that we saw, $20, $30, $35 credits, for taking my oil, that is, that is just ridiculous. But when it got to the point earlier today, Oliver, under $10 a barrel, $5 a barrel, even at zero or slightly negative, that is what these refiners were thinking, is that economically, environmentally, it's just not feasible. So go ahead and take it.
Yeah, I like that roundup, Scott, to really outline the importance of that storage capacity being just totally run out as being the main force for this. If you look at volatility for OVX, the CBOE oil VIX, I mean, obviously that thing is surging. So, Scott, I mean, are we at the precipice of something that is going to be longer lasting for crude, that is still downward sloping? Or is this kind of like an event that will potentially mark a bottom here if it turns out stocks' optimism about the economic rebound is accurate? Because if that's the case, at this point, every car on the road makes a difference for crude.
So there's two things there. Have we reached a precipice? Well, you look at the OVX like you were talking about, and if you correlate to the overall market and the overall VIX, when we saw VIX get to 70, 75, 80, boom, that was, capitulation. So you can kind of look at the OVX and maybe say the same thing. However, even if we start opening back up next week, the following week, a month from now, 3 months from now, okay, there is still the demand destruction. There's no chance we're getting to anywhere close to demand that we were just 6 weeks ago or 8 weeks ago anytime in the near future. I mean, OPEC is accounting for what, a 30% drop in demand? I mean, that number should really be 50, 60% in my estimation for at least the rest of 2020.
So, okay, Scott, there's also the case that, people make saying, hey, this is the contract that's expiring today. You can't read too much into it. There's not as much liquidity, but I mean, June got blasted too. The whole crude market got blasted as well. So we're now at a point here when you talk about connecting stocks and oil where they're just incredibly at odds, right? It's hard to reconcile. Something's got to give here. I know there's a lot of kind of like oil truthers that'll say, don't forget stocks, look at oil, that's the true story. But I mean, if you've got, like, we've been sitting here all day talking about tech companies, talking about software, talking about the things that have been working. I mean, if crude oil is can evaporate from demand that much, then maybe there's a whole section of our economy that can do okay without energy. I mean, I know people have been making that case for a while.
As there always will be, Oliver, regardless of the situation that we're in, once the shock and awe of the unknown of a horrendous situation is over with, there's always a new beginning. There's always new technology. Right now, I think that maybe Main Street is finally realizing that some of the tech sector and what you and Tom just talked about, a stock like a Work, Slack, that some of that can go on without the oil space. Obviously, the overall economy, we need the oil space to be there, right? I mean, we're not going to zero consumption forever and ever, but it's really just a matter how and when, more importantly, are we going to get back to even 50? I'll call it 50% of normal. I don't think that's happening in 2020.
Yeah. All right. Scott Bauer, CEO, Prosper Trading Academy. Appreciate the update here, Scott, and nice work, no doubt about it, on the call you made a week ago here as oil began its descent. Scott Bauer, always good here in Chicago with us.